So, Chevron just dropped some massive news, a record-breaking quarter. We're talking production numbers that are just, wow, off the charts for them. But here's the thing. It's not just about the big numbers. There's a huge acquisition and a really interesting strategic shift happening behind the scenes. And that's the real story. So let's dig in and figure out what's actually driving all of this. You know, when a company this big puts out an earnings report, it's more than just about their bottom line. It's kind of like a checkup for the whole global energy market. And believe me, what we're seeing this quarter, it's pointing to some pretty big changes on the horizon. Yeah, the numbers are huge, no doubt about it. But what do they actually mean? What's the story they're telling us? Come on, let's get into the nitty-gritty. Okay, first things first, let's talk about that headline number that's got everyone buzzing, 4.1 million. That's how many barrels of oil equivalent they were pumping out per day. It's a new company record, and just to put that in perspective, that is an absolutely staggering amount of energy. And all that production? Well, it turned into some serious cash, as you can imagine. We're talking $3.6 billion, that's with a B, in adjusted earnings. And that's just for one quarter. Okay, so $3.6 billion. Where did it all come from? To really get a handle on that, you gotta understand the two main parts of a business like Chevron. It's pretty simple, really. You've got upstream and downstream. Think of upstream as all the work to find the oil and gas and get it out of the ground. Then downstream is taking that crude, refining it into stuff like gasoline, and then selling it to you and me. So how did each side do? Well, if you look at how they did compared to last quarter, earnings were up by a cool $575 million. And the reason why is pretty straightforward. They just sold more stuff. In the biz, they call it higher liftings, but it basically means more product going out the door. But wait, here's where it gets interesting. If you compare it to the same time last year, earnings were actually down by $900 million. So what gives? It's a perfect example of how much global oil prices matter. The price of crude was just lower, and that hit the bottom line. Plain and simple. So that brings up a really important question, right? If prices were down, how on earth did they manage to pump out record amounts of oil? Well, the answer is all about one thing, the Hess acquisition. This is the real game changer this quarter. Seriously, this one deal explains almost everything about those record-breaking production numbers. Okay, get a load of this. The stuff Chevron already owned, their production grew by about 227,000 barrels a day. That's pretty good. But the new assets they got from Hess, they added a mind-blowing 495,000 barrels a day. That's more than double the growth from their own stuff. It was without a doubt the engine driving this whole record. And you know, it's not just about the oil wells and the hardware. Chevron's CEO, Mike Wirth, went out of his way to talk about the people. He said, and I'm quoting here, "I was impressed with Guyana, obviously, but I was really impressed and pleased with the quality of the people." That's a pretty big shout out to the new team members coming on board. All right, so they've got record production, they're making a ton of money. But what do they do with all that cash? Let's follow the money trail and see where it leads and what it tells us about their strategy. In this quarter alone, a whopping $6 billion went right back to shareholders. You can see how they did it, about $3.4 billion in dividends and another $2.6 billion buying back their own stock. It's a crystal clear message. Keeping investors happy is priority number one. So how are they making so much money? It's not just about pumping more oil. A huge part of it is efficiency. The CEO talked about what they're doing in the Permian Basin. Basically, they're using new tech to get the same or even better results with fewer rigs and crews. The bottom line, they're pulling more oil out of the ground for a lot less cash. Okay, so this whole story of efficiency, plus bringing the new Hess assets into the fold, it really sets them up for what's next. So what is next? What's the next big bet for a giant like Chevron? Well, the CEO basically told us. He said, we need to ramp up some of the exploration activity beyond just the focus on near infrastructure opportunities. Now, that might sound a little corporate, but what it means is huge. It's a signal that they're ready to start looking for big, new finds, taking on bigger risks for potentially massive rewards. And this isn't just talk either. They are putting their money where their mouth is. They're jumping into these new, high-potential areas. We're talking places all over the South Atlantic, Suriname, Brazil, Namibia, plus new ventures in West Africa and other parts of South America. It's a global push. So here's the big takeaway, the thing to really think about. For years, the name of the game has been playing it safe, focusing on shale oil in the U.S., where things are predictable. But this new push into global exploration, this feels different. It feels like a pivot. So is Chevron, one of the original giants of the oil age, getting back to its roots of high-stakes, wildcat exploration? Now that is the multi-billion-dollar question, isn't it?